Friends, in today's video, we are going to dive into the world's oldest, deepest, and the most psychological chart reading technique, Japanese Candlestick Charting Techniques, the legendary book written by Steve Nison, which started the entire candlestick revolution in the Western world. This is not just a book summary. It is a journey to understand a visual language that reveals market psychology, fear, greed, hesitation, pressure, and reversal, all rising on the graph like candles. When Steve Nison first introduced candlesticks in the West, traders were shocked. Because where Western charts only showed price, candlesticks showed emotions. Today we will learn step by step how candlesticks work, how to read momentum when a trend is dying, when a reversal is forming, where buyers-sellers pressure exists, which candles are the most powerful, and Steve Nison's most valuable insights. So let's begin the amazing scientific journey of candlesticks from Japan's 18th century rice markets to today's global stock markets. Price equals emotion. Steve Nison's core principle. Steve Nison says, candlesticks are a tool to visually understand the battle between bulls and bears. Every candle tells a story: who won in the market, who lost, who hesitated, and when the crowd psychology is about to change. Candlesticks don't just show price range, they show momentum, rejection, pressure, indecision, demand and supply, shift, short covering, stop-loss triggers, everything. That's why the chart is called the language of price, and candlesticks are the most expressive part of that language. Candle equals open, high, low, close, but the story is much bigger. A candle is not just four numbers. Steve Nison explains each candle is a mini-battle. Open, who was in control at the start. High, how far buyers pushed. Low, how deep sellers dragged. Close, who finally won. Close is always the most important because it is the result. If the close is near the high right pointing arrow buyers strong, near the low right pointing arrow sellers strong. In the middle, right pointing arrow indecision. Long bodies equals strong force. A long green candle means trend pressure, confidence, buyer domination. A long red candle means panic, fear, seller aggression. These candles shine on the chart like neon and show which direction the heart of the market is beating. Shadows equals the hidden truth of the market. The most underrated part of a candlestick is the wicks or shadows. Steve Nison says, shadows reveal the truth behind the war. Upper shadow means buyers pushed price up, but sellers defeated them, and closed lower equals weakness. Lower shadow means sellers dragged it down, but buyers defended equals strength. Shadows are the biggest indicators of reversals. Doji, market silence, the beginning of a storm. Doji candles are one of the most important candlesticks. Open and close are almost equal. They show indecision, tug of war, market hesitation, trend exhaustion. A doji can signal reversal, but not alone. It needs context. Steve Nison repeatedly says, a doji at the end of a trend is far more powerful than a doji in the middle of a range. Hammer and hanging man, hidden reversal signals. Hammer, bullish. In a downtrend with long lower shadow and small body, it confirms buyers are fighting back. Hanging man, bearish. Forms in an uptrend. Lower shadow shows sellers attempted pressure. If the next candle turns bearish, right pointing arrow reversal signal. Steve Nison considers both among the most reliable reversal candles. Engulfing patterns. Direct battle between buyers and sellers. Bullish engulfing. Small red candle in a downtrend followed by a bigger green candle that engulfs it. A powerful reversal. Bearish engulfing. Big red candle engulfing a small green in an uptrend. Strong selling pressure. Steve Nison says, engulfing patterns show a sudden shift of power. Piercing line and dark cloud cover. Dual battle patterns. Piercing line, bullish. Green candle penetrates half of previous red candle. Dark cloud cover, bearish. Bearish candle falls halfway into previous bullish candle. Both signal a clear momentum shift. Morning star and evening star, most trustworthy reversal patterns. Morning star, bullish, 3-candle pattern. 1, long bearish. 2, small candle, doji or spinning top. 3, strong bullish, a classic bottom reversal. Evening star, bearish, opposite pattern. Top reversal. Steve Nison calls them trend-changing signatures. Trend plus candlesticks equals deadliest combination. Candlesticks work best with trend, not alone. Uptrend right-pointing arrow bullish patterns more effective. Downtrend right-pointing arrow bearish patterns more effective. Range right-pointing arrow signals unreliable. Context gives a candle its power. Support and resistance plus candles equals market's most accurate language. Candlesticks give strongest signals on key levels. Steve Nison writes, hammer at support, right-pointing arrow trend. Reversal shooting star at resistance, right pointing arrow selling pressure. Doji at resistance, right pointing arrow. Weak buyers engulfing at major level, right pointing arrow. Reliable shift. Big market moves start from these spots. Shooting star, fastest signal of buyer defeat. A shooting star forms when buyers push price up, sellers take full control, close happens near the low. The upper shadow is the funeral of buyer's effort. Steve Nison says, a shooting star at resistance is one of the deadliest bearish signals, but next bearish candle gives confirmation. Inverted hammer, sign of bull recovery, forms in downtrend. Long upper wick shows buyer attempt, sellers rejected it. But if next candle is bullish, right pointing arrow start of reversal. Spinning tops, silence before the storm. Small body shadows on both sides, symbol of conflict. At key levels, this can signal trend exhaustion. Harami pattern, trend psychology in reverse. 2-candle pattern, big candle plus small candle inside it. Steve Nison says, Harami shows weakening momentum and potential reversal. Bullish Harami right pointing arrow reversal and downtrend. Bearish Harami right pointing arrow slowdown and uptrend. Needs confirmation. Harami cross, the deadliest doji combination. Second candle is a doji. Shows extreme trend weakness. Tweezer tops and bottoms, instant reversal clues. Tweezer top, bearish, 2 equal highs. Tweezer bottom, bullish, 2 equal lows. Steve Nison says tweezer formations show price rejection with precision. Gapping candles, the story behind price jumps. 1. Breakaway gap, trend start. 2. Runaway gap, trend continuation. 3. Exhaustion gap, trend end. Gaps carry the DNA of trend strength. Window, Japanese term for gap. Japanese traders call gaps windows. Act like strong support/resistance zones. Breakaway window right pointing arrow strong zone. Exhaustion window right pointing arrow reversal zone. Falling 3 methods. Bearish continuation. 1. Big red candle. 2. 3 small bullish candles. 3. Another big red candle. Shows sellers control. Rising 3 methods. Bullish continuation. Opposite structure. High accuracy continuation. Marubozu. Clear, powerful candle. No shadows. Bullish Marubozu equals buyer's absolute control. Bearish Marubozu equals seller's unstoppable. Steve Nison says, Marubozu candles show the highest emotional conviction. Breakout candles. Signs of real strength. 3 types. 1. Strong body breakout right pointing arrow most reliable. 2. Shadow breakout right pointing arrow caution. 3. Weak body breakout right pointing arrow may fail. Confirmation. Steve Nison's most important lesson. Steve Nison says repeatedly, candles give signals, but confirmation gives power. Next candle or structure must confirm. Volume plus candles equals maximum strength. High volume reversal right pointing arrow strongest. Low volume breakout right pointing arrow fake. Volume spike right pointing arrow smart money activity. Market context. 70% of candle power lies here. Candle's power depends on trend location, support/resistance, volume, exhaustion. Right candle at wrong place equals useless. Wrong candle at right place equals powerful. Trap candles. Fake reversals and fake breakouts. Big wicks, small bodies, low volume breakouts, random doji sudden spikes, unreliable signals. Real reversal signs. Steve Nison's 5 golden rules. 1. Candle must be at trend end. 2. Second signal must confirm. 3. Volume must support. 4. Must be on key level. 5. Next candle must show direction. Following this removes 60 to 70% false signals. Candlestick signals, real-world meaning. Long upper shadow right pointing arrow weakness. Long lower shadow right pointing arrow strength. Small bodies right pointing arrow confusion. Big move coming. Volume plus candlestick equals 10x accuracy. High volume plus reversal equals strong. Low volume plus breakout equals weak. Volume spikes equals big players active. Candlestick plus support resistance equals true power. Hammer at support. Engulfing at resistance. Doji at resistance. Shooting star at top. Trend plus candlestick equals professional insight. Trade with trend continuation signals are more reliable. Meta patterns. Multiple candles, one story. Big red right pointing arrow doji. Right pointing arrow engulfing equals bullish. Big green right pointing arrow. Spinning top right pointing arrow red candle equals bearish. Repeated upper wicks equals buyer failure. Breakouts with candlestick filters. True breakout. Big body close above level, no long wicks high volume. False breakout. Small body long wicks weak close low volume. Market psychology. Emotions inside candles. Panic right pointing arrow long lower wick. Greed right pointing arrow big green candle. Fear right pointing arrow doji. Euphoria right pointing arrow parabolic. Capitulation right pointing arrow huge lower shadow plus high volume. Entry, exit, SL, confirmation. Entry right pointing arrow reversal candle, plus level, plus volume. Stop loss right pointing arrow based on wick/body of candle. Exit right pointing arrow opposite signal. Confirmation, right pointing arrow next candle plus volume. Indicators plus candlesticks equals best combination. Candlestick plus MA right pointing arrow trend. Candlestick plus RSI right pointing arrow, OBOS. Candlestick plus NACD right pointing arrow momentum. Limitations of candlestick, Nison's warning. Sideways right pointing arrow weak. News right pointing arrow unreliable. Low volume right pointing arrow risky. Needs context. Overanalysis right pointing arrow confusion. Closing insight. Candlesticks equals market mindset. Steve Nison's biggest teaching. Candlestick is not something you learn, it's something you learn to see. Candlesticks teach. Trend reading, momentum, liquidity, behavior, market psychology, smart money footprints. Your turn. Take action. Apply this knowledge on charts daily. Candles will begin to reveal market psychology. Support matters. Like. Comment which book next. Subscribe. Your support motivates creators. Friends, in trading, knowledge is not power. Applied knowledge is power. Candlesticks show you market truth. Now using that truth is in your hands. I'll see you in the next video with another powerful trading book summary. Till then, trade safe, stay disciplined, and keep learning.